Good afternoon, everybody. So I'm just going to welcome onto stage for this FinTech Impact on the Buy-Side session in order Clare from Essentia Analytics, Graham from Schroders, Koley from Bernstein, and Stewart from CME. So thanks very much, everybody. I'm not going to go into detailed bios for everybody. They're in the pack. So hopefully we're just going to make this an interesting chat towards the end of the day, and hopefully you'll enjoy it. So if I can kick off maybe with Clare in the first instance, can you just explain a little bit about your organization and how they play into the fintech space and how you engage with various clients, be they buy side, sell side, or infrastructure, because we've got infrastructure represented here today as well.
Sure. My company is called Essentia Analytics, and we do behavioral analytics that help human fund managers make measurably better investment decisions. So dealing exclusively with the buy side today, and exclusively with the front office, in that we're using machine learning techniques and a purpose-built software platform combined with human expertise as fund managers. I'm an ex-fund manager, and there are 10 of us at Essentia who are ex-fund managers. We put together the computer and the human, and then go in and help an existing fund manager to de-bias and to make better decisions for having the assistance of technology and data analytics.
Thank you. And Koley, you know, if you think about it from your perspective and how you develop an investment strategy, be it for operational purposes to extract benefits and value, or more principally, how do you approach looking at various companies in the fintech space and harnessing their power?
I mean, I think there's two main ways. The main thing is to start with the customer and figure out what the customer is trying to achieve and how we can help our customers better achieve their objectives. So everything we're doing is customer back, and that's really critical to us. So some of that's us identifying a need, and sometimes it's also just surveying the landscape and knowing who the players are, knowing it's a good cultural fit that will be able to work together and achieve an outcome. And we want to make sure everything that we're doing has a measurable outcome that we can achieve.
And Stewart, from your perspective, I suppose a lot of people, we were talking backstage earlier, a lot of people don't know who CME is really in the market as far as fintech, but you guys have been very active for a number of years looking for an edge, be it in data or in technology, and how you engage with customers. Can you just explain a little bit more about your investment philosophy?
Yeah, sure. So CME Group is kind of jokingly one of those big companies that a lot of people, certainly in EMEA, haven't heard of too much. But the exchange itself is one of the world's leading and most diverse derivatives exchanges across 6 different asset classes. The buy side is clearly a very major sector for us, and for a long time we've been looking at fintech either building or investing or partnering, and we do that in a number of ways. So we have CME Ventures, which is a part of our organization where we invest in disruptive technologies and fintech companies. We actually build our own technologies ourselves for our customers. And the part of CME Group that I work within is the market technology and data services team. And that is really principally where we try and partner with technology companies in order to build services or partner to provide services to clients that add value really to the investment process.
Thanks. And Graham, from your perspective, obviously being, well, I suppose one of the oldest names in the asset management and investment management.
Not me personally, obviously.
Oh, well, no, you haven't been there from the beginning, quite clearly. Can you talk a little bit about how you look to engage and harness the power?
Yeah, Schroders has been an innovator since day one. You know, they've changed and pivoted the business model. So it's only natural that now, as fintech in London is and globally is really evolving and starting to really help push new solutions to old problems, that we're out there and we're trying to understand that. So we're working with companies like Clare's, trying to understand exactly how do we take advantage of the technical innovation and how is it applicable to Schroders. So we do a lot of partner days, we do innovation days where we invite companies in, we attend events like this, and we go and meet with various organizations in various pitch forums to try and understand and really just help them understand our need, because I think, we're not unusual, but the buy side is often not their first sort of focus. And then that also helps us in really understanding how we can apply what they do to the problems we have.
And just coming back to your business, Clare, where behaviour is a key thing. Obviously, data and capturing data is a very important part of gaining insight, be it in terms of a customer or even an employee of a company. Can you explain some of the areas that you've contributed some value to in a different way than in a traditional sense in using your tool, or even before that when you were in the industry?
Well, so when I was a fund manager, I found it very frustrating not to have a data-driven feedback loop on my investment decision-making, save for my performance, right? And looking at one's performance is a very noisy measure of skill. So if you want to be increasingly good at what you do, looking at your performance is not really a very good way of reflecting. And yet, there's a data footprint that's being captured every single time you do a trade, and even when you don't do a trade, when you're doing research, when you're capturing notes. There's a lot of work that fund managers do that is creating a data set that is not necessarily being used, and that data set could be used by that fund manager to reflect and to understand, what is it that I'm good at? I'll do more of that. What am I bad at? I'll do less of that. So what we do at Essentia is take all that data, hold up a mirror, show the individual or the leader of a team, here's where the strengths are, here's where there's room for improvement, and then here are some tech-driven, we call them nudges, but interventions basically that can just remind you when you're about to make the same mistake that you've seen in the data you have a tendency to make, and it tends to destroy value. Or when you're about to potentially go into a situation where historically you've been really good at that, and it's worth having extra confidence. And when you do that, people do make measurably better decisions. So we're in the business of helping people to improve and then proving it back to them, through statistics. Look, this is you getting better, just like if you were an athlete and you started to pay very close attention to your training or your practice, you would expect it to produce results and expect to see proof of those results back. That's what we do. So it's really adding value at the very top line of an investment management company.
In terms of Alliance Bernstein and using those kind of tools, what kind of experiences have you had, and what kind of outcomes do you focus on in terms of engaging?
Yeah, so I think there's two sides of the business. There's the manufacturing and the distribution side. I sit more on the distribution side. So where we're starting to use data to inform decisioning is really on the sales enablement and advisor enablement. So in an intermediary-driven market, to understand eventually, we were talking earlier, eventually we'd like to understand the end customer's needs better. That would help us inform us, but we use data on the advisor and data on our sales team's performance, and we've created an app called Simon that we're using to enable our field sales teams with data real time as they're making decisions and talking to customers.
And you are extending that out into self-fulfillment, so you talk about the relationship manager and the coverage and sales, for instance.
Yeah, so the first instance of this has been focused on the wholesaler who's out in the field talking to the retail intermediary. The idea is to then figure out which part of these tools makes sense to extend to customers, and then also how to extend the data that we're collecting so that we have more touch points to better inform people and to better predict where they should focus their time, what the next best action they could take is with a customer, those types of things. We're just at the starting that process. And for us, it's really important to start with just standardizing the data we're collecting, because you can't really automate anything or really inform everything if you're not standardizing and cleaning your data in a way that then you can structure it and use it.
Graham, does that resonate for you? Or
Yeah, very much so.
In terms of going further out into, I suppose, what some people call robo advice, how mature are we in that?
Schroders is an intermediated business, so I think that we're doing everything that Koley is doing. I think the key point Koley made there was the data drives everything, and I think one of the biggest areas that we're finding FinTech is actually helping us is the actual management, the ingestion and the organization of that data. And I think that's probably one of the biggest areas where we're seeing the most progress. We've been, gathering data for years. It's organizing it to turn it into the gold that it is, and producing that telemetry to run your business. I think about manufacturing. It's a very data-driven business, and there's no reason why financial services shouldn't be, and I think we all know it needs to be, and we're on different parts of that journey. But that data management is where we're seeing the biggest leaps forward, really. And it's because of organizations such as Google, etc., where they've got such data at scale that some of the techniques that they've used, they're spinning out, and it's becoming commoditized, and we can now start taking advantage of it.
Okay, I want to come back to that point around privacy and later on, but Stewart, as far as an exchange group, what traditionally was an exchange group, you've expanded your footprint, and you're continuing to expand your footprint, and you're a data provider to the buy side. So can you talk about how your business model has changed and is changing just generally in order to meet those needs?
Yeah, it's a really interesting one. So, one of the common statistics that's out there is that 90% of the data in the world has been generated in the last 2 years alone. So we're in the middle of this, data revolution, if you like. So there's the investors now have more access to the digital world around us than they ever have before. And that's quite interesting, but it's a challenge as well to a lot of our customers, and specifically the buy-side customers. There is almost too much data out there. It's fragmented, it's unstructured, it's very hard to unify into a trading model. But something we're very much trying to do is help our customers on that path. So CME Group has a huge amount of data. We have over 500 terabytes of data going back to 1972. And that's great, but that's just our own market data. But a lot of our customers are saying, look, we need access to differentiated sources of data, whether it be satellite imagery or geolocation or all these different things, colloquially known as alternative data is the buzzword that's typically associated with it. But they're looking for ways in which that data could be harnessed. And another thing that's quite interesting for us is data is typically a means to an end. So a lot of our customers don't actually want the data. What they're looking for is the insight that they can mine from the data. And so we're going to try and launch a lot of these alternative data sources on our platform, but specifically to try and help customers discover correlations in our market. So it's about trying to find that kind of needle in the haystack, as we were talking about, extracting the gold from the data that is there, but it can only be done when the data itself is structured in a way that is easy to interpret, and you're seeing the actual signal from the data as opposed to the noise that surrounds it.
So if you look forward, Koley, and you think about your business model and the use of FinTech within that business model, where do you see, you talked about the impact in terms of the relationship manager. In terms of manufacturing and operational processes, you got FinTech in there as well. How do you see that end-to-end business model changing?
Yeah, I think it's really important for us to focus on where our core competencies and strengths are. So we know our customers, we have data around our customers, we know how to manage investments well. We have philosophies around that, and then we need to supplement it with all the things that you're talking about. What other information and experience and data can we bring in to append and expand our view? What other ways are there of doing things that we haven't thought about yet that we can expand what we're doing and not recreate what someone else is doing? So I'm not really interested in spending the time to build something that someone else has. I'm interested in really leveraging that and increasing the impact for our customers and for our business. And so we see that partnership really strongly with FinTechs, who are able to innovate and bring us new ideas and supplement where our core strengths are.
Okay, and if I think about the universe of FinTech and data companies out there, there's there must be a multitude of new startups every day, as we all know. There is a screening process, a filtering process, and you know, maybe Graham, you take this in the first instance, that you guys will look at in order to narrow down that universe. How do you go about that internally at Schroders?
Fundamentally, it's got to be relevant. You know, it's got to be something that, you know, solves a problem that we either knew we had or maybe we didn't realize we had before we went into the pitch. So it's got to solve a problem. We are trying to create a culture as an organization where we can get as early a stage with the fintech as pragmatic. You know, I think a lot of fintechs have historically found, probably, you know, before sort of 2017, that when they engaged an organization such as, you know, Schroders or a big organization, the processes were designed for your big multinationals vendors.
For your IBMs?
Yeah, exactly. So you'd have the lead time, and as an ex-entrepreneur, the lead times of when you're trying to sell into a big organization kills you, because when you're pitching and then you're seeing a COO and then you're seeing this person and then you're meeting procurement and then you're meeting the legal guys, those are all times when you're not pitching, you're not developing your product, and you know, you're burning money. So, you know, we're trying to find ways to compress that wherever possible. So for us, it's not just about the application. You know, we need to try and adjust ourselves to try and make it so that we can maybe take a non-traditional fintech, you know, an early stage one that has a really innovative idea that, you know, we can help bring in and help them on their journey, you know, by helping it become enterprise ready. So it's got to have an essence of solving a problem. Ideally, they will have worked in financial services before. Why that's an advantage is because of all the regulatory criteria. They haven't made any decisions that preclude that, you know, and just. Really, they've got to be prepared to, you know, be a little bit patient with big organizations such as us.
And Claire, you must be on the other side of that, but have the benefit, obviously, of speaking financial services language. What's your experience been in trying to break through and register on the radar of the buy side?
Well, so credibility, you know, is worth everything. I think when you're first going into large organizations, you need to have clients who will already vouch for you and ideally already have made a name for yourself. But even then, the key is to be prepared to invest in developing your business to meet the needs of these large organizations. They're coming sort of halfway to meet us in the sense that the IT security in particular organizations are having to grapple with, you know, due diligence questionnaires where not everything is yes. And it will be. Give us a little time and we'll do that. And so they're having to become a little bit more flexible and get to know what the fintech has to offer to the business. Why does the business want it? Is it really worth taking these risks? But the fintech has to invest pretty heavily in terms of infrastructure and processes and policies and things to get up to that sort of industrial level very quickly. And I think that's something that a lot of fintech startups will massively underestimate. It doesn't earn you revenue. You know, it's a sort of necessary evil. But then once you've got that, life becomes much easier when you're dealing with these big players.
So for you, Stewart, that's obviously cyber is and you know, people's utilization of the cloud, particularly fintechs, must be an area that you look at very closely when you're screening the end delivery model.
Yeah, I mean, for us, the main thing is that the fintech firm we're looking to collaborate with or partner with ultimately solves a problem that the customer has now. And we see an awful lot of fintech firms who have fantastic technology, and they almost look to us to try and help work out what the problem is they need to solve. So try and reversing the solution to the problem, if you like. It works much better when the fintech firm has done a lot of research in our customer base and comes to us and said, look, we think your customers have this problem. We have this technology that we know it solves. Can we help, you know, work with you to do that or to achieve that? So that's typically the best way I think we tend to work with fintech firms when they have done that research. In terms of cloud and looking at, you know, security, obviously there are prerequisites involved in working with any organization. at scale, and scale is kind of the key problem or key opportunity, depending on which way you look at it. But the things like I said, cloud and security, they're more prerequisites. The difficult thing to get over is the finding the problem that the solution actually solves in the first place.
Koley, is that the case for you? And just out of interest, you obviously have a global responsibility. Do you see a difference in the maturity of the organizations that come to you from different jurisdictions?
Yes, there's definitely maturity of the organizations, and there's maturity of the customer needs, so in what problem you're solving. So recently was in Asia and in some markets that are so mobily driven, right? Mobile only, not just mobile first. The different type of thinking and the ways we have to free up our data to engage with that type of partner for them to reach an end customer, right? So if we have, for example, data in a static PDF file that describes our product, that's not going to present well in that type of platform, and so we need to think very differently. And so in many ways, our partners can help us get there faster because they've been thinking about that and dealing with that problem. But I think to the point earlier, we also have to think about what's important to us and how we relax some of the ways that we've done things. We're going to have to do them differently in this new world. So protecting our data, protecting our clients' data is going to become and remain critically important, and we will need partners who are taking that very seriously. But in other areas, we're going to have to find ways that we're sharing and partnering differently, and not in the rigid ways that maybe we've traditionally pursued.
And if we just, kind of dwell on this privacy and customer data point for a second, because it's obviously very topical with the Cambridge Analytica case, amongst other things. If you think about that, almost that paradox that you've got to manage, which is you want access to customer data in order to be able to analyze, and it doesn't matter if it's behavior in employees or outside. And on the other hand, obviously regulation is coming at us thick and fast on privacy. How do you, maybe Graham, you've got the magic answer for this, but how do you balance out those two, what seemingly conflicting criteria?
Well, I think the thing we're trying to do is to recognize that customer data is sacrosanct. People give you so much personal information as a financial institution. You have to respect that, and we do. So most of what we're doing in terms of the analytics, really, in applying data science, doesn't go anywhere near the customer information, really. What it does is, most of the time, it's looking at the sort of sales alpha, the teams that are providing solutions to them. It's coming up with what is the right solution and how effective are we at delivering that. It's very much, putting the client first is one of the biggest areas of evolution of financial services, I think, in that if, we talked about Asia, when you have a PDF, if you go and talk to a millennial now who is used to living their life on their mobile phone, and you say, we're going to sell your product and we're going to do it via paper, and you're not going to know how much you're going to pay for it until the price is struck at 12 o'clock the next day. That's just not going to work, for much longer. So really where we're investing is how do we develop our products so they're relevant and they're more finely tuned to actually what our clients want in terms of a solution. So for us, that sort of safe, the vault of client data is just sacrosanct.
And Stewart, do you see, you think about some of the trends there that Graham talked about, do you see a crossover from other industries into financial services? I mean, the one in capital markets, which obviously you spend a lot of time in, is a crossover from the gaming industry in terms of engagement model, technologies crossing over. Is that a trend that you see maybe with customer engagement?
Yeah, it's an interesting one. So a lot of those technologies, emerging technologies, tend not to come to financial markets first for whatever reason. It's typically gaming, or it's healthcare, or it's driverless cars, or whatever it might be. But certainly there's an awful lot we can learn from that. And I think on the AI front, for example, there's a huge amount of benefit that is potential, or there is potential for a huge amount of benefit in financial markets, principally because there's a huge amount of data. And these emerging technologies work really well where there's huge amounts of exponentially increasing data, and there is certainly that in financial markets. We're looking at one AI application at the moment where you can effectively detect patterns in market data. So a little bit like Google image search, where you upload an image to Google and it works out what image you're looking at and returns search results based on that. We've done a very similar thing with a central limit order book, so you can detect patterns in the market data and look back in time. And that technology was borrowed from another industry. That was one of our semi-venture firms that we worked with that originally weren't in financial markets. So we definitely see amazing applications for technologies from other industries and moving them into financial markets. And one of the key areas that we look to around that at the moment is artificial intelligence, but there's many others that are equally or have as much potential as that.
Okay. I'm conscious of time and obviously throwing out to the floor for any questions. Does anybody have any questions at this point in time that they want to raise with the panel? Sorry, have we got some mics at all? You're just going to have to shout very loudly then. Please, your name, company, and your question. So the question was, what are the pain points? What needs to be removed? And I think that's targeted at Koley and Graham. Koley, do you want to kick off on that one?
Sure. So one of the ones, and I think Graham talked about it earlier, is on data ingestion, right? Data processing. We're not a data analytics company. It wasn't where we started. We use data to make investment decisions. We use data to do things, but we don't move as quickly. And so it is a pain point for us, and it's one that partners potentially can help us. Data science, predictive analytics, how we think about things. And then on new tools that we can bring to customers, how we engage with our advisors and how our advisors engage with their end customers. That's another area that I think is ripe for partners. And the last area would be maybe around automation across all that, right? And how does robotics play out and what else can we think about? And as I said, some of it we're anticipating and thinking about, but we also benefit from learning from what is being developed, and that helps us identify, oh, that's another opportunity. So I think, those are the three buckets. It would be data, it would be tools and engagement, and then it would be around robotics and automation.
Pretty much nailed it, yeah. We're just trying to organize, really, so we operate, we're using a term internally about operating at the speed of click. So, trying to create that straight-through process right across the business so that when a client, makes, through an intermediary, makes a trade of buying one of our products, everything is engineered, to be as efficient as possible.
I've been handed an iPad, and I've got a few questions on here, so I'm just going to pick one, and I'm going to throw this one at you, Tracy. So does a typical fintech company outsource the marketing of its product or developer resources to building that in-house? So how much of your stuff have you done internally versus you've used third parties?
I mean, I don't know how typical we are, but we have done almost all of our marketing internally. In part, that's because I quite enjoy it, and I'm the founder. So, I think it's an area of expertise in my own skill set that has meant that we can save a lot of money on it. That said, I do outsource to the extent that I have specific freelancers that I tap for different projects, and I would like to spend a lot more money on marketing. It's just a question of getting to the point where that makes sense. And I think there's a lot of marketing companies assume that fintech is going to be a good hunting ground for them, but they may underestimate just how impoverished these companies might be when it comes to marketing budgets.
Or maybe they're just focused on their core product and they want to get that right, which is kind of, I suppose, what you're intimating as well.
I mean, there are people in every fintech company who are entirely focused on the core product, and hopefully there's at least one person in every fintech company who understands the importance of marketing. But you're obviously not going to spend more on the latter than on the former, at least not in your early years.
Okay. Any more questions from the floor? Sorry.
I have a question for Koley. The Simon app that you mentioned, is that
Yeah, I actually realized that was a good point of clarification. So his question was about Simon, the app that I mentioned, and was it just focused on the US? And I realized after I told that story that yes, it would have been good to qualify that we have just introduced that in the US, but it is indicative of how we're thinking about other markets and how we're thinking about enabling our field force with better information and insights.
Is it, just out of interest, is it voice activated, or is it
Sorry?
is it voice activated, Koley? Or?
It's not yet voice activated, but it could be, so it has that potential. So today it is an iPad app, so it could definitely use Siri. We are looking at other ways we can bring in chatbots and bring in Alexa-like language or Google-like language. So we want to test out a few platforms to see. But I think for someone who's in a car, voice activated would be good. For someone who's on a call with a customer and who needs to ask a question, put it on hold, also asking a question. So voice, I think, is important, but we haven't done a lot with it yet.
Okay. Any other questions from out on the floor? I'll go back to the iPad. Okay. So this is, I suppose, I'm going to throw this one at Stewart. What's your approach to build versus buy for key needs?
Key leads. I mean, the approach to kind of build versus buy, I guess that was the question. So for us, CME Group is a relatively large organization. Now, obviously, there are some technology aspects that we build in-house, our matching engine and so on and so forth. But when it comes to emerging technologies, we are not particularly as agile as a small fintech startup firm. And so what we much prefer to do is partner and collaborate with fintech firms that can add value, as I said earlier today. But the thing that we do bring is the distribution, so huge distribution to our global audience. And one of the things we're very much trying to do is find partners, find fintech companies that add value, substantial value to our customer base that may not have that distribution, but they do have the technology and the agility to react quickly to changing customer needs. So very much we're looking to partner. I guess maybe not buy, maybe not build, but certainly partner and collaborate is a sweet spot for us right now.
And is there any particular segment, or is that just across the board?
It really, I mean, it goes back to customer needs, and as I mentioned earlier, a lot of the customer needs that we see at the moment in the buy side are around data, so ingesting data or sourcing data or making sense of data. So a lot of that speaks to fintech firms that can bring insights in from large data sets or help to ingest data. So those types of tools and services that can help our customers trade our derivative marketplace more effectively with greater insight. They're the kind of things that are interesting right now. But generally, meeting fintech companies across the board is interesting to us.
Okay.
I'd like to add something to that. Please. I think there's a third option, which is collaborate. So, one of the things that when you go to Silicon Valley is you come back with this immense feeling of the collaboration that goes on there. So what we've done is we've launched a product called InvestIQ, which helps people use behavioral finance to look at their own behavior, and their biases. And what we've done is, as an asset manager, is we've built that using APIs that, other, distributors, et cetera, can plug into. So, and likewise, they're then plugging that into their chatbot or something like that. So, that's a big departure for an asset manager to be building tools in that way that can create that collaboration. So, and we're expecting people to do it with us as well. So I think you're starting to see that third way as stuff gets commoditized.
I think that's critical because I think if you turn it around to the customer need, especially if you're an intermediary, they're very unlikely to be working only with one asset manager. So they want to think across an environment. And so if we're able to enable them better, that's helping solve their problem and can, create commercial opportunities that are viable. So.
Okay. I'm conscious that we've run out of time as per the clock on the front there. I'm going to ask the panelists, if you were going to give one piece of advice to a fintech, and obviously you are one and you've come from the industry, one piece of advice to a fintech knocking on your door tomorrow, what would it be?
So I guess my advice would be for a fintech who is seeking to knock on the door of everyone else here. Be prepared to be extremely patient and expect a very long sales cycle. And anybody who tells you that that is not definitely going to be the case is lying to you. But once you get there, it's worth it. So just know that that's what you're getting into.
Graham? Don't do it.
No, I think understand the regulatory environment in which we have to operate. You know, there's so many times you see a fantastic idea where they've nailed the UI, they've nailed the actual what it does, but they made a really bad technology decision that just will not work in a regulated environment. You know, so I understand them. You know, our limitations. You know.
So you're talking about distributed ledger technology now? No, just kidding. Koley?
I would say make sure you're solving for a customer need. So like really great idea, I think that was your example, but with no application or limited application, it's hard for us to then figure out where that could solve a problem. Like it's really important to come in with what's the customer need you think that you can help solve.
And Stewart?
Yeah, I'd echo that. So come solving a problem, not with a solution. So, you know, identify what that problem is, understand the context and the domain within which we operate as best you possibly can, do your research beforehand, and then when you come in, identify the problem that you're solving and pitch against that.
Okay, so thank you very much to Clare, to Graham, Koley, and Stewart. Please show your appreciation in the usual way.
Thank you.